All right, guys, this will be the 17th update to the Bitcoin Trading Journal series. And you may be wondering, why does this guy upload so many live trade videos? The idea is that, I want to document my trades. I want to show you my trades in real time, document my executions, as a way to differentiate myself from some of these people who, claim to be traders but don't actually trade. They don't show their trades because they don't trade. They don't show their trades, or they don't take trades because they aren't profitable, and that's why they're not showing you their trades. Again, a lot of these guys, they they claim to win every trade, but of course they don't show those winning trades, and most importantly, they don't show their losses either. Um, so part of the idea is to create a trading journal series just to demonstrate for you guys that this is not just theory. This is something I put into practice, and you can see my trades. I'm fully transparent with that. Um, of course, this is a paper trading account, but I am documenting everything. You can see my history here, account history, different P&L right here, different dates and different order entries and P&L levels. But essentially, I also want to show trades where essentially I took a loss. I don't want to cherry pick for only winning trades. And so yesterday I posted a video where I took an entry here at this level here, using the invalidation down here at this low. I had my first take profit target at this level right here. Price ultimately ran up, hit my first take profit, and then ran for my invalidation. So I got one take profit hit, and then the invalidation on the trade got hit. Now the invalidation was confluent with the low of this low here, which was last week's trading week. So this is significant. It's worth talking about a little bit because, when price action took out that low, this is starting to be a little bit of the makings of a swing failure pattern. Now we don't have the weekly closure, right? This is very important, right? So, um, you know, sometimes you will see this pattern put in, and it appears to be a swing failure pattern, but you never get the weekly closure below that weekly low. And in those cases, a lot of times you'll see this low violated, and then price will run aggressively up for the highs. Um, that's a pattern I've noticed before. It's a pattern that could be playing out. Again, could not. We haven't seen the close yet. So although, market structure is starting to break on the lower time frames, the intermediate time frames, the 4-hour chart really isn't a low time frame, but for lack of a better word, the intermediate time frames, uh, you know, it is starting to break down a little bit, but I would be looking at that weekly closure. Whether you're looking at CME on Friday or the Trading View close on Sunday, I think both are valid. I think you could use the CME close on Friday. Um, it just depends on what you're looking at and how you interpret the market. But I think both are valid, and both would lend more confirmation to the idea that this is a high being put in here. Um, and in that case, if I do see that, then I would want to get a little bit more aggressive in managing the risk on this position. But so ultimately, my low the low where I was managing a portion of my risk on my trade got hit here, and took me out of 30% of the risk on my trade, and I actually re-entered a significant amount of risk here on this low, and you know decently caught that low to some extent. Um, Again, it's I don't necessarily try to do that, try to catch that low, and it probably doesn't look like it's playing out very well at this point. But again, this is a price distinction that I do want to trade, and it's a good area to add to a long position. Now, as far as where do I manage my risk on this position and where do I take profits? Well, seeing as how the lower time frames are starting to break down, and the my entry is getting a little bit closer to, or my position, my average cost on my position is getting a little bit closer to current price action. I need to be a little bit more cavalier in the way I manage risk, and by that I probably want to use this low here, um, have this ultimate low today on today's price action at 43,171 on Coinbase. So let's see, we'll manage a good deal of risk on that position. We'll manage 33, which is managed a little bit above profit. Um, so we'll see 43,171. And we've got that stop in place. And as far as the take profits go, now that the structure's starting to break down, I think I want to be a little bit more dynamic in, the way I take profits. And by that, I mean that, I want to be a little more aggressive in my profit taking, because we could see a deeper retracement, essentially, uh, kind of going off like some of the things that I've mentioned previously, and some of the things that are happening on the weekly. Could see a retrace a little bit lower, um, than where we currently are at now. And in that case, I don't want to be married to this position. I want to be able to dump it and come back with fresh eyes at some point in the future. So now, if we go down to a 5 minute, we'll take a look at what actually got me into this position here. So this is kind of the type of behavior I like to see around the areas where I get in, right? Because I have this area marked off on my chart for a while, this 43,333 level, for lack of a better term, and I like to see this distinction we see on the 5 minute, where you see this kind of whipsaw behavior, right? So here, price, hits that level, runs up, and then it runs up above these highs, just above, stopping anybody who has a stop above there, and then runs down and reaches for the level again. Again, I think this was the run that got me in, and I like to see this behavior around the price distinction I was looking at, and on the higher time frame, just because it kind of tells me that buyers are stepping in the market. You typically see that whipsaw pattern around an area of interest on a higher time frame level than the whatever whatever time frame you're looking at. In this case, the 5 minute, whatever time frame the whipsaw pattern occurs on. So, essentially, I'm noticing that in price, and I'm thinking, okay, well, this is looking good. It's looking like a potential swing low, right? We have this price runs down here, runs up, runs above the highs, sets a lower low. So you get this volatility expansion. The swing low at the area of interest is surrounded by higher lows on both sides. So, it's a situation where you don't have confirmation, right? You'd want to see confirmation that this level is, in fact, going to become a low with, these areas taken out. Maybe you put that level there, or you mark off this high here. But again, you want to see price confirm that by running up into this level here. But then, maybe you go to the 15-minute chart, and what does that look like? Well, you start to get the etchings that, this is a pretty volatile move, pretty, inefficient. So, even if you're looking for a deeper retracement, you might see this and you might think, okay, I'm looking for, 40,000 based on my TA, maybe based on the weekly, you know, levels we pointed out earlier. But even if you are, expecting a retracement to 40,000, Just going off the impulsive nature of this move, um, the most likely scenario might actually be, a relief bounce up into these levels, whether you're bullish or bearish. Um, Again, if you're bearish, you could be looking for shorts off the release bounce. But after you see a movement like this, right, roughly a $4,000 move, that's not really the time to be piling into a short. You if you are looking to build a short position, you probably want to be looking for a little bit of a bounce up into these, into potentially say a 45,000 level, something like that. Now, that would be where I would be being pretty aggressive in the way I'm taking my profits. Again, I'm not going to leave a lot riding now that the intermediate timeframes have broken down. I'd be more, you know, maybe taking 30% profit at the initial take profits as opposed to 20. Again, nothing incredibly aggressive, but a little more ramped up in that direction. And now, so ultimately, what you want to see if you're bullish, what you want to see is essentially, yeah, you'd want to see 45,500 reclaimed. That's kind of the area where, if you do see that, I wouldn't be too keen on taking shorts up above there, but a rally up into that level, up into these levels up here, that would be a valid short setup, maybe even a little bit higher. But you have to keep in mind where the weekly low is, right? So if we go to the weekly chart we looked at previously, this weekly low is right here. So we kind of mentioned, keep an eye on where the week closes. That may be Friday for CME. So maybe, 2 days away, 48 hours. But the idea is that we're keeping an eye on that weekly level. You can see price broke it, came down, tested up into it, sold off, right? So that's kind of the area where I marked off the, where essentially you would confirm this level as a low. If you start breaking up above there and start trading really aggressively above that low, then you have a scenario where it starts to look more and more like a stop run on the weekly. And again, if you trade over, if we rallied up above 45,500 and even closed above there, say we're trading up around that level on Friday's close, close of CME, well, then that's going to look like a little more of a stop run, and then you'd have a close up here. It would be a little different weekly look. So I guess that's a long way of saying that, price doesn't need to trade all the way up to 47,000 and reclaim these highs up here to necessarily offer a bullish opportunity with the weekly context in mind. I think really the pivot that we're looking at in the market for the next 2 days until the weekly close is really ideally, in my opinion, this level here. So marked by this price extension here, run up into the gap up here. See what that looks like on a 15-minute. Whether you're trading here or up there, you could draw a 618 up here. But ultimately, I would be taking a look at this intermediate term range for the next day or so. And if I was looking to frame a short, I would be, kind of looking to build a position around this 45,000 level in the next day or so. And again, although I'm not looking to take a short, I'm still looking to sell in that region, and I'll be looking to take profit in that region just to hedge myself against that possibility and, manage risk pretty aggressively on this trade. I did add a significant amount of risk at 43,222. So, I want to start managing that pretty quick. And in the spirit of aggressive management, maybe I want to be a little quicker to pull things in. You can start managing above here, 44 or 222, and then, maybe 44 or 444. Again, the idea being that you don't necessarily pick and choose. You just put these levels in here. So let's see. So just put this on the table. We got 44279. Maybe manage. Let's see. So 7 there. Let's go down even to the. Let's see what we got on the 1 minute chart. A lot of people don't like to trade the 1 minute chart, but sometimes it will offer some insight into different levels. Yeah, I don't want to make this too complicated. I'm just going to break it down into very simple levels that are easy to identify. So we've got 44,279. Then we've got this level here at 44. We'll just call it 44,666. 44,666. Maybe we'll do 10 and 10. So we'll do 10 there. Change this one to 10. And ultimately up to this level here at the 45. We'll just call it 45,111. And we'll put that cell over there. So again, we've got this frame of reference, and we've got 33 managed here, then 33 sell orders up there, kind of sandwiching price between our orders. Now, again, if price comes back, reclaims this high, we still have a position on the table to experience, a sustained rally if that is what the market's going to do. If it doesn't do that, if it comes up, stalls in this level, it's stalling above my entry, and it gives me an opportunity to manage it a little more actively and take some of that risk off. Again, theory being that, we don't necessarily know what the market's going to do tomorrow or which direction it's going to expand tomorrow, but we do, or I do. I personally have a little bit of a bullish bias, expecting a move roughly up into the 56,000 level. So I want to maintain a position for that possibility until things really start to break down and invalidate that case. And now, what would that happen? What would have to happen for the larger picture bullish bias to get invalidated? Well, I would like to see probably what would do it for me is if we saw a lower high put in. So say Bitcoin puts in a low somewhere in this region and then comes up, sets in a lower high somewhere in this region, and then sells off after the lower high. Well, then you have a type of scenario where prices after that probably going to revisit the bottom side of this range, and in that case, you don't really want positions, with a cost basis of 40,000 roughly. So just something to think about. Again, if you like this type of content, make sure to like the video, make sure to subscribe to the channel, and stay posted for new uploads to the channel.